Hello, and welcome to Financial Fluence, where we'll teach you the most up-to-date strategies and tricks for making money online. Don't forget to subscribe to the channel, hit the like button, and turn on the notification bell to be notified every time a new video is uploaded. Also, don't forget to leave a comment down below. In today's video, we'll talk about 5 mistakes you should avoid during a recession. Who do you think is making the most money out of this situation? Everyone is applying for unemployment benefits and trying to figure out how to stay alive during this pandemic. Even billionaires are afraid that they could lose all of their money in the blink of an eye. In the first 3 months of the pandemic, Eric Yuan made $4 billion. He would likely make a lot in a few months or maybe even a few years. A year ago, he wasn't even on the list of billionaires. He started the company Zoom and took it public last year. Today, he is worth more than $8 billion. But he's not the only one. In the middle of this crisis, thousands or even millions of people are making a lot of money. Because from what we know, this recession is likely to turn into a depression. And if that happens, most of us will die. But if you make smart financial choices, you will not only get through it better than everyone else, but you might even end up rich. Number 1. Cut your expenses. During a crisis, cash is king, and crisis creates opportunities that don't come around very often. You could run into one of them, but you won't get it if you don't have enough money to invest. During the dot-com bubble, Amazon, Google, and many other great companies got their start. If you had put $1,000 into Amazon in 1997, that money would be worth $1,362,000 today. This crisis may be a little different, but it also gives us a chance to do things differently. But you have to have cash on hand to use them. If you were able to keep your job during all this chaos, you probably worked from home while the country was on lockdown. As more businesses figure out that they can let their workers work from home, this is likely to become the norm. So now you don't have to pay too much to live in the city. Living in the city is expensive, and most people spend a lot of their money on rent. If you can keep your job, move somewhere else, and cut your rent payment by 20, 30, or even 40%, you should do that first. Who knows how long the crisis will last? Right now, every dollar counts. How much money have you saved by cooking at home because you didn't have many other choices? My friend said he had saved a lot of money on Starbucks coffees. We've learned from the lockdown that we don't have to spend so much money to live normally. So we can invest more and achieve our goal of being financially independent much faster than you thought. So save everything you can. Number 2, keep holding. It's great that more than half of Americans put money into the stock market. But the stock market has been going down for a while now. It has gotten a little bit better, but things don't look good overall. When things like this happen, most people panic. You've saved money for years, but now that you've invested it, you've lost 30 to 40% of what you had. Most people cash out before they lose any more money. Because of this, it has gone down so much. People are selling their investments because they don't know what will happen in the future or where the stock market will go in the near future. Everyone is trying to keep losses to a minimum. Yes, it would be great if you could cash out just before the crash, but most people don't have that option. Do not sell and keep holding. The market will get better at some point, and most of these businesses will be worth what they were before. If they have a good business, they will not only get back on their feet, but they will also grow faster. This is what happened in the last crisis and pretty much every other one since. This is especially true if you invest in an index fund like the S&P 500. Don't be one of those people who bought at the market's peak and sold at its bottom. Of course, if it's a bad business, like a bad airline, it could go out of business. And even getting half of your money back is better than getting nothing. So think hard before you sell. Number 3, don't be too sure of yourself. At the time of the dot-com bubble, every day a new online business opened. Investors were ready to put money into any business whose name ended in .com. It was a golden opportunity that no one wanted to miss. But only a few of them, like Amazon, Google, and a few others that are still growing, were real. A few years ago, the same thing happened with cryptocurrencies. Some investors just threw money at most of these businesses, thinking that if even one of them did well, it would make up for all the others that failed. And if staying away from people is going to be the new norm, which it seems to be, entrepreneurs will try to make money in any way they can by making apps, software, bots, and anything else that will help us live, work, and have fun in the new world of social distance. Many of these businesses will look like they will change the world, but they probably won't. They will probably fail in a few years. So you need to have a lot of faith in the businesses in which you invest. During the dot-com bubble, Mark Cuban began Broadcast.com, and Yahoo, which was the biggest website at the time, bought it for $5.8 billion, making Mark Cuban a billionaire. Good for him, but bad for Yahoo, because when the bubble burst, Broadcast.com went out of business, which hurt the whole company. Number 4, don't put money in a bank. Even before the pandemic, the best you could get on a fixed deposit was a few percent. They just about made it through inflation. Even if you don't want to get rich by putting money in a fixed deposit, you still want your money to grow by at least 2 or 3% to keep up with inflation. If you don't do this, your savings will lose value every year because inflation will eat it up. But what's different now is that when the economy isn't growing for any reason during a crisis, the central bank usually lowers interest rates to the bare minimum to get businesses to borrow and grow so that the economy can get back on track. Some banks, like Wells Fargo, pay as little as 0.01%. This won't change until the economy gets out of this crisis, which isn't going to happen anytime soon. And this isn't just true in the US. In Europe, the interest rate is 0.5% less than zero. So don't think about banks as investments during a crisis or at any other time. Number 5, don't invest your last dollar. There aren't only good things about the stock market. If you don't know much about money, you have a higher chance of losing it. Even if you are careful, there's always a risk. So take off your rose-colored glasses and look at the risks. Putting food on the table should be your top priority, especially if you have a family to feed. Don't invest your last dollar, especially if you've just been laid off. Imagine if this crisis went on for a long time. What are your plans? At some point, you'll need money to keep living, and you'll have to sell your positions at a loss. The stock market is more about how you feel about things. You have to be patient, have a plan, and make decisions based on logic and reason, not on how you feel. When there is a chance to make a lot of money, not everyone will take it. But losing your savings when you need them most is much worse. Now it's your turn to tell me what you think. How do you plan to make the best use of this situation? Let us know in the comment section below. I hope you enjoyed this video. If you enjoy similar stuff, check out my other videos. And if you like it, hit the like button, subscribe to the channel, and turn on the notification bell. And I'll see you in the next video.